Hey, everybody. Thanks for joining us for this Monday episode of Trading Rebellion. With us, we got our senior crypto analysis from Market Rebellion, CJ Reichel, and Monty. He's just a one-word guy like Madonna or Sting.
Exactly.
And then Trade the Change very own Chief Community Officer and Director of Research, Nick Mancini. Wow, it was a crazy weekend in the TradFi sector. We had the UBS negotiations and offers for Credit Suisse, which were finally finalized yesterday afternoon at more than 2.5 times their original offer of $1 billion. So that was interesting, and a lot of little nuances taken out of protections that they wanted. We did notice that Justin Sun. Yes, go ahead.
That's what I was going to say.
That's
a $1.5 billion bid. That's I gotta love it.
I mean, I'm not even it was. I think people just passed over it. Justin Sun, founder of Tron, and multiple other interesting things, offered $1.5 billion for Credit Suisse, wanting to take it into the Web3 space. Too bad he lost. It might have been a different landscape today. First Republic Bank, FRC, trading halted twice today. Keeping an eye out on that. Obviously, I disclosed that I have an irresponsible long on that, on the hopes of a buyout announcement coming. But with that being said, we also have rumors going around of a Donald Trump arrest happening tomorrow in New York City. I've seen the videos online. They have the blockades coming up. I hope there is no crazy violent demonstrations. And if he does get arrested, and I want to get everybody else's opinion on this, I'm telling you, I'm out of the market tomorrow because I do not know how to trade the volatility from a Donald Trump arrest. Anybody have any insights or feelings on what the market does?
Isn't it just an indictment, which is not a formal arrest?
No, indictment's coming down today or Wednesday, they said. But before the Wednesday indictment, they said it was coming today and tomorrow to be arrested.
Well, I mean, if he makes bail, then who's going to riot? Like the ex-president of the United States isn't going to make bail. So, he's going to walk in, take a mug shot and walk out and then make a speech. And then 4chan goes, the 4chan servers start catching fire. I don't really know.
What is the market going to do? How's the market going to react?
The market's dealing with Jerome Powell having to, potentially run back into his cave on Wednesday and stop rate hikes. So I think if the market is moving on Donald Trump prior to Jerome Powell, probably the biggest Federal Reserve meeting we've had since the bear market started, I would be shocked. I will definitely be watching the news because it is pure entertainment to me. But if the markets are really moving on that, then I think we have a much larger problem at our hands because then just fragile markets is my opinion. Sorry, go ahead, CJ.
All I care about is the Trump NFTs, because if he does end up getting reelected in 2024, who knows, right? Who knows?
Whatever happened to those, CJ?
I don't know.
Who knows?
Honestly, I mean, CJ has a point. Like anything that happens with Trump, I guess the Trump NFTs are a proxy for that. And any news around Trump is good news, typically.
Yeah. And I think just to play devil's advocate to, Nick's point a little bit here, I think right now the stock market is in a very fragile state. It is in a confused state. And it seems like any sort of catalyst could plausibly push us, lower. So I think that, despite the fact that, yeah, you're right, he'll make bail, take a mugshot. You sound very familiar with the process a little bit. But all jokes aside, it could have an effect on the market, really. But I do think you're right. At the end of the day, Wednesday is what's really important. This is purely entertainment, but you do have participants in the market that will say, some big players that made a lot of money during his time in office that will be like, oh, Donald Trump's in jail. I've lost all faith in the system. I'm pulling my money out. And we could actually see some significant sell pressure. But that's just to play devil's advocate. I don't necessarily think that that's going to be the case.
Since the Donald, I guess, just as an affirmation of CJ's mention of the Trump NFTs and Alex's timeline associated when we got the news, which was late last week, to now, Trump NFTs are up 30%. So if you were playing Trump NFTs instead of the First Republic Bank, you might be up.
I want a Trump NFT with like a prison tag, like a teardrop tat.
Yeah.
Oh my God! All right, let's take. I wonder if there probably is 100 million Donald Trump.
$1,000 for a Trump NFT right now. $1,000.
Wait, what?
Crazy. It's $1,000 for a Trump NFT right now.
It's too much. All right, folks, let's take a look at the market. We're up 100. We're up to 1.16 trillion total market cap today, which is good because we've had about 100 million of that missing for quite some time. But still down 2% overall. Bitcoin 27,625, down 1%, but has taken, couldn't stay ahead of that 28,200, 300 mark it was trading at. Sentiment still 73 out of 100 bullish. Ethereum obviously following what Bitcoin's performance is doing, but we've had 82.3 billion in trading volume. Again, that's these are one of those outsized trading volume days that's going on. A lot of volatility. Heading down to, I want to take a look at the stable coin inflows, outflows. We see over the last 24 hours, there's been more outflows than inflows by dramatic price, 110 million. Leaving exchanges just 2 hours ago, we got 80 million for last hour. So we'll see where that price driver goes. Sentiment for Bitcoin starting to taper off a little as price drops slightly, but we had a good rally, and I wasn't expecting more bad news in the banking markets per se. I was expecting more white knight news. So I didn't expect Bitcoin to pump anymore, but we have some regionals that are flopping around now like fish on land, and we could see a further upside to Bitcoin going into this week, but we'll see. Let's. I want to get all three of your guys' ideas on what's happening in the regionals as far as banking before we head into the crypto stuff. We had UBS successfully bid for CS. We had the Suisse radically change their banking laws in order to make this acquisition go through in a short period of time. When it comes to what we're looking at this week, and we see some ripples with FRC, guys, weigh into the banking situation that's going on. Do we see more failure? Is that what this is a leading indicator of with First Republic?
Yeah, I have a feeling that we're basically seeing a giant shift in global banking. You have senators calling for $2 million up to $10 million FDIC insurance. From the current 250, you have the Fed increasing the balance sheet 300 billion. The Fed and 4 or 5 other global central banks now have a daily USD liquidity repo set up where it was previously weekly. And so now it's easier to acquire capital for lower rates. And, if you just think about the giant shift, if you have more than $250,000 and you are watching the news right now, what are you doing? You are probably pulling it out of, ABC, Omaha Bank, and you're probably putting it into JP Morgan, Chase, Wells Fargo, Goldman, one of the top, fund or asset managers or investment banks. So if you think about that, what happens to, trade? It's slowed down because everybody's moving money and everybody's figuring out where payments are going to go. You've got crypto kind of shackled because, Signet's shut down. So you've obviously got a bit of liquidity crunch there, which supports a short squeeze and obviously good narrative associated with banking failures. But if you go back to the traditional market, business is slowed. Nobody has a great banking partner right now other than the top 3 or 4. And you're basically seeing massive consolidation, line up. And who is bailing out all these small banks? It's the big banks. Where's all that money going to go back to? The big banks, because they're basically stopping or slowing the bleeding, but the bleeding, is going straight into JP Morgan and Wells Fargo, et cetera. So in my opinion, banks are going to have a very difficult, 2023. And I think the only sign of safeness in terms of that is the Fed basically reversing on their policy and distracting everybody from banking woes with, a good economy, more liquidity, et cetera. So that's kind of my opinion. But how that plays out in terms of immediate market volatility, I'm still confused on, because more liquidity in the system typically means higher prices. But typically also when the federal funds rate starts to decrease back to zero, the markets will reset. And we've seen that time and time again. So I'm sitting on the center of both sides of the coin right now. I really don't know where markets are going to head. I just know we have a lot of confusion and pain ahead in terms of assessing where markets are going to go.
Yeah, and I also think it's very important to take a look at things like the 10-year treasury yield, because like you mentioned, Nick, all this money is flowing into these major banks, and what are they going to do with this money? They're going to most likely buy T-notes, yield 4%, and then pass on 0.5% to their customer. It's just a matter of how long before those customers start moving their money from JP Morgan, and I think that has to do with what we've talked about in terms of right now, market confidence is just not high. And people, even, if you can't trust a bank, all you can really do is move your money to JP Morgan, Wells Fargo. People aren't investing in the stock market because, like you said, they're moving their money. And while that money is being moved, it can't be, it's for all intents and purposes for the stock market, it's essentially a liquid. It's not going to be invested for quite some time. So until we see these dominoes stop falling, and until we see all the capital settled in places like JP Morgan or Wells Fargo, I think you're right. I think the stock market could, continue to take a hit, particularly the banking sector, in the wake of these continued collapses.
All right. Nick, let CJ, you have something to add, or do you want to continue on with the topics?
Just to give a brief overview of my opinion, and there's a complete difference between my opinion or what I think is going to happen and how I trade it. I'm not going to argue with the market if my idea that I say today becomes wrong tomorrow or a few days from now. But generally, how I view this year is that coming into 2023, we had every major bank give a forecast or a prediction. BlackRock, Deutsche Bank, JP Morgan, all of these banks had the dollar going higher. They had the Qs crashing. It was overall going to be a very rough 6 months start of the year, a very rough Q1. And the interesting thing is that the exact opposite has happened. We've seen the market rip, especially the NASDAQ rip all throughout Q1. And, if all of those big banks were saying, all right, first 6 months of the year is going to be atrocious, it's going to be very hard, but we're going to have a recovery in the second half, the contrarian mindset would go against that. And so far it's worked very well, right? We've gone up when everyone else thought we were going to go down. And so I think as we move, let's say hypothetically, the Fed does move towards more loose monetary policy. I think when they finally cut rates, that's when the market will crash. And that will maybe be 6 months or in the last half or the second half of 2023, I think is when things could get a little bit hairy. I right now reminds me very similar of after COVID. We've had a massive decline in terms of sentiment, and no one believes that the market should go up or that the fundamentals are strong, yet the market continues to go up. And I think the ultimate pain trade for the market from a contrarian perspective is NASDAQ going to 13,300. I think that that's interesting risk reward because it feels like nobody is really positioned for that. We've had a little bit of shorts cover in the last week as price really took off, but that's kind of my general outlook and has remained so for the last month.
Alex, I want you to pull up my chart really quick because we just kind of talked about both sides of the coin here. And if we're just looking at the chart from a technical perspective, we met, the August 20 range, which was sitting at the top of the previous high prior to the COVID dump. We're above the 1 week estimated 200 moving average, which we all know is pretty much a stalwart in terms of support and resistance. We also have an inverse head and shoulders as we are likely nearing the perceived end of the interest rate hikes. Now, we have very low volume for pretty much an entire year, which makes sense, due to people splashing around in, bonds and treasuries and things of that nature, as opposed to equities. But, if you're looking at this and saying today, or last week, which was, pretty decent looking candle, especially with the follow through. If the Fed's giving us more liquidity, if the Fed's likely to, stop interest rate hikes, if all central banks are coordinated to support the financial sector in terms of quote unquote getting business done, across all sectors, and you're looking at this, on a long-term time frame perspective, it's starting to look like a buy signal. And and CJ Monty, I think we both know there's still a lot of shorts in the market, and there's still a lot of money on the sidelines. So what happens when those shorts cover, and what happens when that liquidity comes back? I don't think we're going to go under the estimated 200 moving average if both of those happen. But it's the big question is if those happen. So I think, talking contrarian, I think you can be a contrarian on both ends right here. We're pretty much, flatlined in terms of a long-term perspective after all the volatility we have. So, you can really choose up or down, but right now the general formation seems to be kind of pushing up, especially with higher low and higher low after the lower low, which is pretty decent market structure, if you ask me.
Just one detail I'd like to add to your point where you said, there's still a lot of shorts. When you look at like COT data and short and long positioning between commercials and speculators in 2000, it was interesting because the market did not top until basically the large speculators gave up in terms of their shorts. So if we do have a lot of shorts squeezed out of the market, if we go higher, maybe that's when the
double
just
top.
A little, I don't know if we'll get that high, but I mean it's more about the positioning, right, and less about the price action. Like I'm not gonna make my decision necessarily on a specific level. It's gonna be when the positioning gets a little bit more neutral.
Yeah, makes sense. Yeah, I just find it fat. I mean, there's every time I look, this is one of the few times in the market where it's really giving you signals in both directions. Like there's very few clear signals in terms of anything other than a scalp trade right now.
Yeah, CJ, we talked about this morning a little bit, but last thing, I'll be brief, Alex. You talked about, CJ, how retail traders right now are stacking up short while we're seeing, the institutional longs actually coming up a little bit as well. So when you have those two things in confluence, you have retail traders getting short, and you see institutions exiting their shorts and starting to flip long. That's an indication that we could see a plausible short squeeze that would drive us up higher. Sorry for interrupting, Alex. Please go ahead.
No, go ahead. Good question from the audience, Luna. Is liquidity from the swap line inflationary? That's I think a lot of people would like to know that. And this swap line that's being put in place is rather large. So it's almost like the money printer's back on, so to speak.
I think there's a statistic we reversed half of all the QT that we've done already.
Yeah.
Sorry, go ahead.
About. Oh no, go ahead. I was
agreeing with you.
It was just okay. Yeah. Oh yeah. So you are correct. Yes. We added 300 billion. I'm sorry, not trillion. To the Fed's balance sheet, and so from a most basic answer, it's yes, but it's a little bit more nuanced than that because you're not delivering $1,600 checks to every single American, which in the most obvious sense is inflationary because that's automatically going to go to start buying goods and supply will contract. And so now you have your demand and supply issue for asset prices. But in a long-term sense, it is inflationary because where is that liquidity going to come from? Fed's balance sheet. And where does that liquidity end up flowing back to? The economy. Yes, it will, but it's a longer term effect and something that the Fed made this decision because it's something that they think they can manage better. and it will be less immediately impactful, and potentially could still get baked into this deflationary narrative that we've been on in terms of inflation being, at 10% now at 5%. So.
Yeah, Luna's other question I wanted to address about Banco Popular, which is the largest bank down in Puerto Rico. I actually had this question from a friend in Puerto Rico the other day, so I'm just going to read off literally the reply on the text I sent him because I thought I put it pretty well. I had to clear mine for a minute. Banco Popular is currently third largest at-risk bank with its AOIC. And for folks who don't know what AOCI is, it's a score. It's net unrealized holdings of gains and losses available for sale security, AFS, which I'm sure a lot of people have gotten familiar with in the last couple of weeks. Cumulative net gains and losses on cash flow hedges and cumulative foreign currency translation adjustments. The AOCI score is how they rate strength of banks. When your AOCI is negative before even selling low rate semi-esoteric or long range treasuries and other assets in a fire sale of your AFSs at available for sale securities, this becomes a problem because then you sell them, you have to mark to market the sale and take the realized loss. The problem is duration mismatch on liquidity. And when you do blow out your AFSs during a bank run, your balance sheet goes upside down. So that's the exact verbatim text that I sent somebody. But Banco Popular, number 3 on the largest at-risk banks in the United States and territories.
Who's just out of curiosity, who's number 1?
Geez, now I got to look it up again. I listed the chart.
I'm sorry, I didn't mean to put you on the spot.
No.
It's a
good question. I shouldn't have gotten out of my text here. So number 1 is elevator music. Here we go. So I texted the list. Comerica is number 1. Zion is number 2. And we've mentioned Zion.
Both of those are been beaten down like crazy too.
Yeah.
Key core coming in at number 4. Excuse me. So, all right, let's get to some fun stuff.
Let's talk some crypto. What do you guys say?
Yeah, let's talk about some crypto. I'm gonna start with Monty. I'm gonna start with Monty because Monty is like revved up about the BNB outperforming a lot of stuff here, and so I want people to get happy.
Yeah, I am pretty revved up about it, Alex. And before we get to my screen, could you actually pull back up your screen with the stablecoin outflows? Because I think that's really worth noting. And worth paying attention to here in the coming days to weeks, because we talk about confidence all the time and the role that it plays in the market. And, it's funny how CZ and Binance have essentially become like, the JP Morgan or Morgan Stanley of crypto. It's like, you don't really feel safe with your money anywhere else. Binance is pretty much the place to put it. And, with everything going on with the stable coins, with people not having the confidence that they once had. We've had stablecoin FUD before, but not to this degree. I think one of the primary benefactors, and we talked about this last week with CZ's tweet, right? He talked about Bitcoin, ETH, and Binance Coin. So those are the 3 that I want exposure to, and those are the 3 that I currently have exposure to. So now if you could just switch to my chart real quick. I love the setup of BNB as well. Beyond the stablecoin outflows and where I think they're going, I love this from a technical perspective. And for me, it's all about, defining risk, entering a trade that I think looks like has some significant upside potential in the immediate future. And I think BNB ticks all those boxes. First and foremost, what I want to see is a close below this level today. This level of about 335, as you can see, was critical resistance. And from a technical analysis standpoint, that makes it support. But it wasn't just this occasion. We can go back all the way to, what is this? August 2022. Even before that, May 2022, this was acting as resistance, but we're above that now for the first time in a while, and that is worth noting. I think this has the chance to significantly outperform. This is what I've been waiting for, is confirmation of this level as support, because we've been rejected at it so many times, with the exclusion of this one big, crazy wick up that, is kind of inexplicable. But, this is more healthy looking price action. We're climbing above a critical level, and the trade setup for this, for me, is very easy. You have defined risk. You have a stop loss at about 330. Anything really below this critical level, if we dip below it, cut it. But the upside potential, I think, is very high. We don't really have all that much resistance until up in the 360 levels, and even that is tentative resistance. So I think that this could outperform even Bitcoin, which has been, one of the best performers of the week. But Binance Coin continuing to look strong. I think we're going to see the Asian bid come in nicely tonight as well. So I'm long this one with a tight stop here at 330, 3x levered, and just hoping to ride it up to about 360. I think that is a goal that we could hit by the show on Thursday. So we'll keep you posted on that one. But it's a trade that I think is looking to pan out very nicely.
Yeah, very cool. I like the fact that, and folks, he covered it in the previous episodes as well. It makes a lot of sense. And this is where you start to see the opportunities through the trees and the market conditions that are happening right now. What BNB has been doing, everything Monty has suggested. And so good call, bud. CJ. It seems like every time you open up your Twitter feed, you see nothing of you see a million posts on make gazillions of dollars on airdrops now. It seems to be the tagline of choice during this market. How to make money with airdrops. This airdrop happening. This airdrop happening. But you're here to cover an airdrop that's been people have been looking to get for quite some time, haven't you?
Yes, and I think those people's punting on exchanges like GMX and so forth is going to finally come to fruition in the form of the Arbitrum airdrop. So this is the premier layer 2 for Ethereum next to Optimism, although I do believe Arbitrum has surpassed Optimism in terms of like transactions as well as total value locked and things of that sort. But on Thursday, in approximately 2 days, or when we hit block number, whatever that is, there will be a ARB airdrop to various wallets. So just looking at a little bit of, actually, I won't connect the wallet, but
I was going to say, be careful there, buddy.
CJ doesn't want to disclose he's an ARB whale.
I was gonna say something too, and I was like, I think CJ knows something I don't. So
nah, it's not a lot. It's not a lot. I brought like $1,000 over to GMX and just kind of experimented with the exchange, probably 6 months ago to 3 months ago. And if you sent over 100 transactions or transacted over a certain amount of value, you will get 1,800 tokens to 5,000 tokens, something along that lines. It's interesting that BitMEX and Arthur Hayes have already listed IOUs for Arbitrum prior to the drop, and these futures already have a 20x leverage. So I'm really glad that we're, like the ammo is set and ready for when this thing drops, I would say. And if we look at the IOU price, there's been a lot of very interesting volume over the last week. This thing actually traded up to a price of $14. So,
$14.
In an airdrop of like 1,800 tokens or 2,000 tokens, I mean,
it's a lot.
I mean,
it's like 20 grand. It's like 20 grand.
And 20, 30 grand, depending on how many tokens you're getting. That's like a lot of free money.
I will say something I've noticed with these IOUs is that the price, the real price is very rarely actually met by these IOUs. So just if you are really betting on a $7 ARB, token 24 hours after launch, I think maybe a little far-fetched, but really? It could go the other way.
So 80 So 68 billion fully diluted value.
Let's-
That's not legit.
CJ, can we just do a quick recap of the timeline of degen? First we had Bitcoin, then we had Doge. That was like the first degen play. Then we went to leverage. Okay, I mean there's been plays on every sort of wacky instrument you can bet on, perps, options, everything. Now we have CJ trading freaking IOUs. The coin's not even available yet. He's trading what if it was. I love it. I don't know where we go next, to be honest with you.
I'm sure the IOUs move faster than the cattle futures, so he had to do something with all the time he had on his hands.
You just got to up the leverage. If it's not exciting, just add more leverage. I mean, it's pretty simple.
That'll keep you pinned to the screen.
Speaking of Doge, CJ didn't want to show us his wallet because he's actually the top Floki holder in the world. So.
I wish.
One last thing about the ARB drop, and this is just on the back of Nick's point. Right now is a very precarious situation for the entire market, right? And when you have an airdrop coming on during that sort of event where like the market's in a precarious situation, particularly the equity markets, I think we'll see a lot of that ARB immediately, sold into ETH, if I had to guess. And that would, of course, drive the price of ARB itself down, or the ARB IOUs currently down significantly. So I agree. I don't expect it to be trading at $7. I expect a lot of people to, immediately cash out those tokens. CJ, I know you got a few. What are your plans to do with them?
Not a lot. We'll see how the first day goes. I mean, what I've been doing is I've been looking at the price action of airdrops like Optimism and DYDX and like comparable airdrop product. ApeCoin is another one, although I'd say ApeCoin was exceptionally good because nobody believed in it. So
the less belief
that works, right? So yeah, I'll probably sell them. I don't know. It'll be interesting either way, but looking at like Optimism and DYDX, I mean, yeah, usually you get a massive sell-off. You get a little bit more, I guess you'd say, return to equilibrium, but I hesitate to even say that because who knows what the equilibrium is on this stuff.
Was OP an airdrop?
I believe so, yeah.
Yeah, so OP is obviously the easiest like lateral move to make in terms of like a coin that should move like Arbitrum. And like CJ said, most of these airdrop coins, they will typically immediately sell off like very quickly. And then they'll reach some sort of short-term bottom. And then typically they'll kind of zoom back up. Maybe not immediately zoom, but over several days make their way back up to wherever they opened up at, or wherever kind of the top wick or bar was. So typically, this is not a 100% thing, but generally sell off, bottom, and then inch higher before some general volatility. So if you are trading, I probably would ignore the first couple of hours. I would probably wait for some sort of bottoming formation, and then I would start to take low risk into Arbitrum because this is a very anticipated airdrop, and I would expect it to not go straight down. I expect some volatility in both directions. So,
yeah, I've just got the Optimism chart pulled up to kind of add a little bit of visual representation to everything you just described. But yeah, I mean, there should be a lot of volatility, especially on that first day.
That's on the 1 day too, right? So the initial sell-off is obviously that giant candle down, and then 2 days it went up and tried to, take some of that candle back, and then obviously went back down. So there will be good trading opportunities, but fresh coins have very little technical information in terms of approaching short-term trades. So just be very careful.
Yeah, and the reason this happens, it's not random. It's the reason why we see these major sell-offs before airdrops is because there are people that get in early. Like in order to get, these ARB IOUs or to get the ARB tokens, you had to go through certain steps. You had to do certain things. Those people got in early, are able to sell at that initial price with the goal of buying back in when price, reaches that plateau. So people like CJ that, did everything necessary to get the Arbitrum token. You had to, trade this much notional value, bridge over this amount of money, blah, blah, blah. Then you get the tokens. It makes sense that they sell them with the goal of buying them back later because they jump through all those hoops in order to get the token early. It's like, it's basically like getting access to like an IPO almost before it even happens, really. And it makes sense. Like, it's not just random.
It's like banks before an IPO. They get all they basically dump on retail, and then you buy it back lower. That's what Goldman does all the time. So.
And then one small aspect on this, and this relates to what I mentioned on the B3 show with Alex, the Nigerians, Lopresti, Grant Cardone, and friends, is my general thesis was built on, bullishness into FOMC, which has been, has come true so far over the past 4 or 5 days since I mentioned that. But I mentioned that there would be a dip around FOMC. And then I mentioned that we would probably recover shortly after that. And my thesis around that was less technical analysis or legitimate fundamental analysis. It was actually in relation to Arbitrum token. And if anyone's ever worked on the back end of any token launch team, they spend a lot of money engaging economists, financial analysts, and people who float in both of those realms, both for their token economy, as well as proper launch structure to make sure that everybody makes the most money possible for that type of launch. Nobody's launching a token for free. The team stands to get way more rich than anyone on this call or anyone who's getting airdropped Arbitrum, and you can bet on that. So in relation to Arbitrum dropping on Thursday, I thought it was very interestingly timed after FOMC in the grand scheme of things. Arbitrum has been wanting to launch a token for a year. The rumors have been around for longer. So there is a reason they're choosing that day. It is not an arbitrary, haha, wink, wink, day that they chose. I believe that it was for a reason. So in that opinion, I have a feeling that we'll probably ease off the bullishness as we head into FOMC, see a bit of a sell-off. And then I think Arbitrum will probably spark a bit of a, rally. And Alex, if you share my chart really quick, I'm pulling up the ETH BTC chart. We've covered this a lot. It's pretty suppressed. It's just dipped under, major support. And typically in crypto, we do see a lot of swing failure patterns or quote unquote deviation. We are very oversold, and Bitcoin has been in vogue for quite some time. Now, I'm not saying that this is going to slide back up here, but if we see some deviation of ETH Bitcoin back up above 6.065 by Thursday, I think that you'll probably see altcoins have a bit of fun while the Arbitrum airdrop is propagating into the newswire and crypto Twitter. So just a bit of a general thesis that I've been building, but it would behoove them to time this well. And I don't think that they're going to launch a token into generally one of the worst days of the market. So that's my thought in relation to overarching market in relation to Arbitrum token.
Yeah, that's a great point, Nick. And if you look at, to touch on your last point there, if you look at Bitcoin dominance, it's pretty significantly overextended. We've been even from a weekly chart, it's been going up. Like you said, it's been in vogue for the last 4 weeks. And typically we will see a rotation back into the altcoins. And this could be the catalyst for that. So, Bitcoin dominance is the most overextended, or has had the most consistent daily positive price action that we've seen in quite a while. That will eventually, come to an end, and capital will rotate back into the altcoins.
100%.
I think that could be, coming very soon.
Yeah. I think that's coming in the, in the next week or few weeks. Absolutely, Monty. And I wanted to touch on that earlier. So thanks for bringing that up. The rotation of capital, as listen, we had such a force of velocity and price action on Bitcoin over the last 5 days. We're seeing it taper off now. And as we've seen historically, and alts are badly underperforming Bitcoin. So as we've seen historically, that rotation of capital going into the alts and providing a mini alt season will be refreshing for some of these really depressed tokens. So, but yeah, good stuff. All right, folks. CJ, do you have anything left to say?
No, it's all you.
Guys, thanks for joining us. Don't forget to visit marketrebellion.com and the links downstairs. The link is in the description down below, as well as tradethechain.com. Check us out for all the data that you really need to navigate through these markets, as well as Don't forget to catch us next Thursday at 1 p.m. Eastern time. And then Market Rebellion's John Najarian, myself, and Mark Lepresti. We've been holding Twitter Spaces on Tuesday, Wednesday, Thursdays. And don't forget to catch those. And I will say that last Saturday
Thursday,
or
I think.
Thursday, we had the number one Twitter Spaces on Twitter. Over 120,000 people.
160. You're selling yourself short.
I don't know, but we had the number one Spaces on Twitter. It was freaking amazing. Nick showed up for that one, so that was cool. But yep, we'll see you guys next Thursday. Hang on to those handlebars. Let's see what happens with the regional banks and Bitcoin over the next couple days. Thanks, folks.